Good morning, Bruce here, Targeted Wealth Creation. Let's jump into YBIT and BITO on Monday, July 1st. All right, so one of the issues here was this was ex-dividend date, so I marked this with a little color. So that's why it was down 1.6 and we were up 2.59 because it had paid $1.50. Well, it had declared $1.50 on 6/28. So Monday was their ex-dividend, and so they should have opened around 21.05 or 21.50. I can't remember. Oh yeah, they should have opened around 21.01, and so they actually moved up back to 22.15, but they're just I'm showing you the difference here, so it really doesn't matter. All right, let's get in. What happened? What kind of transactions? Well, it's kind of ironic. On Friday, these guys, on Thursday, they ended with 2,175,000. So on Friday, they had to sell some synthetics, and they had to sell some covered calls, or naked. I call them naked call because they're really not covered, but they had to buy back some of those. So let's go look at the synthetic, and then I'll show you what I mean by that. So here was Friday's activity because shares were sold. So they bought back 2,100 contracts on their 35 synthetic. And that cost them 10 cents to buy it back. Sorry, they normally buy it, but in this case, they sold it and they had to buy back the puts. This is, see, when you do it the normal way, like this, you buy the call, sell the put. So you pocket a lot of money when you're way out of the money, like in the 22s versus 35s. So because there were share or fund redemption, they had to take this trade off by buying back the call and, selling the call and buying back the put. So what happens on Monday, they get the same 225,000 shares come back in the fund. So basically, they did the same amount of volume. But you can see this time, they only had to spend a penny, right? But they didn't sell it for as much because with the ex-dividend date, BITO was at a lower value. So anyway, I thought it was just kind of interesting how that set itself up. So let's go back to the June tab. So in addition, okay, they sold two more because on 6/28, remember, they're rolling over. But instead of rolling over the full 14,000, they didn't have enough money, so they just didn't. They only rolled over 73.50 and then bought back this 2,100 worth of the synthetics. So now they come along and they go back up to 21.75, right? So they got 225,000 shares added. People bought in the fund on Monday the 1st. So now they had some cash, right? So I showed you they went and sold 2,100 in the synthetic. They matched that with selling a 22.5, a naked weekly call, and then they had more cash to also put on a 7,345 additional weekly naked calls at 22.5. So they collected good money on that and on the synthetic. So wait till you see what I show you, how much cash they have in the door. It's amazing. I might have upped my prediction that I did over the weekend, but the reality is they had so much cash anyhow, it's really up to YIELDMAX. So I'm not going to comment too much until I get over there. So let's take a look at the weekly. So now, instead of just 7,350 at 22 expiring this week, they now have another 9,445 at 22.50. So they've got quite a few contracts, and they're underwater because BITO did well. It went up to 22.15, so it's already by this guy, and it's not that far for 4 more trading days. Let's see how they do. By the way, this was up, and technically BITO was down, but it did really rally from its opening price. Like I said, it's the same as the yield. It's the same of any dividend stock. It always gets reduced in the pre-market by the amount that it paid for the dividend. So that's our situation there. Let's take a look at holdings, okay? This is how the holdings looks. So we go through our cash, no big deal. We see our share count up. Look at the synthetic now. It had been, well, let's go down here and look before you look at it itself. So there it is, 22,648, right? This is now 7.1. I updated the dollars without updating the dates. Okay, so just know that these are all the dates going back. I'll do this another time. Okay, so 22.6, we had been 20, right? But as BITO came down and we came up a little and we sold more, that we now have this. We actually were around 23 before this. So it's pretty reasonable. We've been pretty steady in the 22s. So that will play a role when I get into the next bit. But let's go through these. So here's the original 73.50s, right? We had sold those for like, what did we sell that for? 22? No, we sold those for 27. Then we sold the next batch of the 22.50s for 30, and then we got 26 cents for another 73.45. So all in the 20 cent and 30 cent range. But take a look here, and these aren't really, I usually leave these colored so you can understand the difference of, sorry, that's no. The purpose is that is to distinguish the ones that are going off. So when I show this over the weekend, I can say, hey, look what they bought these back and look what the new ones they rolled to. So they're not relevant anymore. The only reason this is covered to let me know that that was the ex-dividend date when I look back on it. So anyway, yeah, they collected 198, but now that's up to 50 cents because we've run right by it. So, you know, it's interesting. BTC, let me show you where that is trading hang on. I'll get to that in a minute. So BTC, when I looked at it, is trading at 63,465. So it's up, but almost flat from where it was yesterday. It hasn't moved much beyond that initial opening. So I wanted to make sure you guys knew what that was, especially if it moves back. If it gets to 65, we're in the upper shelf, and I figure we're going to move, right? It's going to cause all this stuff to move. But at this point, it could easily just come back down and test sub 60 at 59. Then I think we're prone to 56, and if we break 56, where the 50-day moving average, we could easily go down to 50 to 52, which is major support. But certainly that would hurt, you know, the Misties and the Conies and the YBITs. But other than that, I think, you know, YBIT is doing well here because people are fickle. I don't know if it's prediction videos or what, but, you know, selling 225,000 on Friday because of fund liquidation and then getting 225,000 shares back, and so they had to put more trades. I mean, it's almost silly, but obviously it's not the same people. The people that thought, you know, I'm not sure, crypto, BTC, and then other people probably looked at this and said, oh my gosh, this is on sale, right? So let's go talk about the payout picture and why I think that's such a dilemma for YIELDMAX and for people. Because I had come out with this payment, right? And just to be clear, the previous month, what happens is price is a little higher now. At 1701, this was yielding 81. So the previous month, let's take a look at this. This is our numbers on this May row, right? So they earned, or they cashed in, is a better term, $6.66 in total. A nickel of that was short call per share, right? And they love to, first and foremost, pay on, and those are those weekly naked calls. So they won big on the synthetic, and they only earned 5 cents on the short call income. Now, early in the fund's life in May, they were selling much closer to the money. When BITO was trading at 24 and 25, they had 26 calls, and at one point they had 29 calls. Well, as they rolled out of those, they rolled into a 36, right? And BITO at that time was 25 or 26. So they were making money every time they wrote a synthetic, but they were building up a liability, right? When you go over here to the weekly, you see the liability. Look at the difference of what it's being written for. Sorry, we need to go to holding. So it's being written for the 35. So finally they rolled out of the 35s because they were expiring on 6/21, and they had to spend a bunch of cash. But then when they wrote the 35, they collected a lot of cash, right? So the issue, and I've said this several times, when you look at this, they've got a $22 million, and that's shown right here. If they had to close this today, but it runs all the way to August 2nd, right? See the date, they would have to pay $22.6 if they rolled. But then they would, whatever they sold it into, they would get some money. But it's still sort of like what we consider a paper loss. And when you look at the payout, sometimes in a new fund, if this is a year player and they always have, you know, a $10 or $15 million liability, but they earn $6, if they want to pay $3, they don't think anything about it. They know the fund will make it up. But when they had this 666 out here, they said, well, we're going to pay $1.37, right? But you still have a carry forward reserve of the difference of 666 and $1.37. And now they've collected 763. So I kind of just conservatively said, well, they chose an 81% yield when the stock price was 19, and that's what $1.37 was. So as the stock price comes down, you know, they only need something like a 119 or a 120 right there. 119, 81, that's almost identical. So when they meet tomorrow night, I don't know what, it'll be interesting if they don't come in right at this. Now, if they pay a 50 or 60% yield, right, which is what the underlying BITO, because it's been pretty stable lately, I think that would disappoint a lot of people. So this is really up in the air. Could they afford to go pay $2 or $3? Yeah, they could afford to do it. They've collected the money, but they do have that liability. So anyway, I won't beat it to death. I just wanted to go over again so you see where it is. And to me, this is fascinating. The other fascinating one is Coney and Misty. You know, Misty for the first time earned under $2. But will YIELDMAX pay $2 and keep their 2, 3, and 4 record intact? Or will they drop them to, you know, $1.60 or $1.61 or $1.65? I find that'll be fascinating. And Coney is in the high 170, 180 that they earned. Are they going to pay that? Or are they going to pay them? I think they even earned 201. I'm going to do that video soon. So that's what I got for you guys. Again, this is Bruce. I'm not a financial advisor. This is not financial advice. All right. Hey, have a good one. Bye for now.